السلام عليكم ورحمة الله وبركاته. بسم الله الرحمن الرحيم، والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. نرحب فيكم في الجلسة النقاشية للنصف الأول المنتهية في 31 جون يونيو 2024. طبعا في جلستنا اليوم معنا الرئيس التنفيذي بالإنابة الأستاذ بيبل، ومعنا رئيس تنفيذي المالي الأستاذ بالجندر. سأترك المجال، أول شيء نرحب فيكم جميعا، وأترك المجال للأستاذ فيبل بتقديم كلمة تقديمية بداية لهذه الجلسة.
Thank you so much, Mr. Abdullah. I'd like to welcome all to this half-yearly presentation in terms of our financials. DFI as a group and on a standalone basis, we are currently going through a transformation in terms of different aspects of our business. First half results are a testimony to some part of that transformation that is happening, and more is about to come in the next few months. During this period of transformation, what we are trying to do is we are trying to bring synergies across the groups, whether it is in terms of sales, in terms of marketing, production, in terms of HR, in terms of operations, so that we are able to control our costs, bring in more efficiencies, and bring in more consistency across the businesses. During this process of transformation, we're also investing in terms of our capabilities, which includes investment in our capacity. So we're trying to build our capacity, for which the results will be coming in the next half year and so on and so forth. And also we're trying to invest in our human resources, which would also enable the group to take challenges for the future. With the short note, I would ask Mr. Baljinder, who is our CFO, to present the financial for the first half.
Assalamu alaikum. Good morning. We welcome to all the shareholders, investors, and the analysts for this H1 open house presentation from the DFI management at a group level and at the standalone level. We are happy to answer any of the queries, questions at any depth level. And as our CEO, acting CEO, Mr. Vipul have shared, there is a lot of transformation going from last year at each process, verticals, business operation level, and some of the results are already visible in H1 and some will come in the future quarters as it progresses. So we start with the snapshot of the financials because we already uploaded the detailed financials last month. We start with the standalone. Our turnover has increased by 8%, which is a remarkable growth in H1, which we see, I think this is the highest H1 growth in last 4 years. Now this came from a structured organic growth in sales, in dairy, especially we are focusing the North market and we are doing transformation across the group, the market penetration. Plus we re-exploring our feed mill business. So feed mill also shown a good growth in volumes. Our GP margins have almost doubled from the last year. Again, there's a big contribution coming from the control overall efficiencies and the cost part. The RMPM cost is like almost 20% cheaper than the last year. So we done a lot of re-engineering, reprocesses here, how to order JIT. Somewhere we are taking the seasonality benefit, somewhere we are going to JIT. Some we are doing a long-term contract with the supplier. So this has resulted a good cost saving in H1 versus the last year. And it percolated complete transformation from a loss to a profit in H1. So from a loss of 1.1 million in the last year, we move now to a profit of almost half a million at a standalone level. Coming to operating expenses, so obviously there is a control here also, as we are centralizing a lot of operations and the expenses are controlled. We are very diligently looking into each money spent, each item of money spent. We are in operating profit of 366,000 versus a loss of last year. A significant improvement has come into the working capital because we are monitoring the end-to-end the order to cash and P2P cycle. So we are looking for our overdues receivable. We are renegotiating with the suppliers and we are renegotiating with the customers to reduce our receivable days, our cash conversion cycle, which has resulted ultimately in a positive working capital. There is a significant material cost saving which has come versus the last year because of the all the above as we discussed and mentioned. The average yield, since we have a big farmhouse, a big dairy farm here where we breed the cows, so a significant increase in the milk yield, which is a big component of our cost in terms of dairy business, has come. And we see futuristic also it will be better. So in future also it will be better, and we have a big transformation plan for that. If I go same to the group level, the turnover is 40 million. We are not able to compare with the H1 because in the last year our OGFC, which is our biggest subsidy, was a associate. So we done the acquisition in near to June. So the turnover is not comparable. Similarly, the GP margins almost 20% increase versus the last year at a group level. So overall the direct material cost has been controlled, or the direct material cost plus the manufacturing expenses have been controlled. RMPM cost versus last year, in some one subsidy there is some one-off event which have happened, and now the things are under control. So small increase there. At a group level, we are in losses. As I shared, there was some seasonality and element in the business where we had some shock, and one-off event happened in Q2. Operating expenses at 103% versus 107% last year. So still some improvement there. And we are, the change exercise will span over to a period of next, I think, 4 to 6 quarters. So we'll see a healthy control and the improvement here as we proceed further. Operating loss, we are still lesser than the last year, and this has came basically from the one-off events which have happened in the Q2. So I believe H2 there won't be any surprises like this due to seasonality. Basically, this is the external factor which impacted the business, not within the organization. And there is a positive working capital. So the business side, the stress is lesser. The working capital we have smoothened as we are looking to overall the cash to conversion cycle plus the all end-to-end the cash management we are looking to regenerate it. Coming to the ratios, so any business when we analyze, we have three kind of different ratios, right? One is the performance ratio, which is directly linked to the performance, how the financials has been. Then the efficiencies ratios, efficiencies which ultimately derive the sustainability of the business. And then there are some strategic ratios which are long-term impactful, how the business will shape up in the long term. So I'll start with the DFI standalone performance. So there is compared to the H1 last year, there is a small dip which is visible here, but the last year profit was because of the acquisition of the OGFC. So the fair value have increased. And it was a big chunk of the, I think almost 2 million entry was there. So if I remove that, we are better versus the last year in H1 at operating level. Interest coverage ratio is seen lower because we converted our short-term borrowing to a long-term borrowing. So that's why the interest coverage seems lower, but it has impacted the overall working capital movement positively because we have a lesser stress, and because of that, we are able to take a better deal in our procurement and overall the cost control. Gross profit margin, if you see here, there is almost more than the double gross profit margin. And this is again, I believe, a remarkable performance of the last 3 to 4 years. So things are improving here. And the cash ratio, so this is just how much cash we keep it to sustain the business. So this is also flattish. If I go to efficiency ratio, so current ratio have improved from the last year. This shows that the liquidity plus the working capital in the business are sufficient. The receivable turnover is lower because we are end-to-end monitoring the process. Inventory turnover is lower because we have built in some inventories, and the sales is now improving. As we see, there is a volume growth of 8 to 9%. Operating expenses, so there is an improvement here. It's better. And again, this operating expenses ratio, if I assume this is best of last 3 years. If I go to more on a strategic ratio side, debt equity ratio, this ratio is bit improved because we converted our short-term borrowing to a long-term borrowing, streamlined the borrowings at a company level, at a group level. Return on equity is lower. This is again due to that one-off entry which we have in the last year for the acquisition, but overall it is better. Asset turnover ratio is flattish, and the return on asset is, again, this has an impact of that one-off entry. But the things at a standalone level are really satisfactory, and the things are shaping up well. If we see the performance of the last 3 years, so this is consistently now the performance is improving, and this has been I would say the result of the continuous effort of the board plus the change management exercise what we are doing, and there is a continuous involvement from end-to-end process transformation, looking after each element of the cost and how we can bring the efficiencies and the effectiveness in the overall operations. If I go to the group level, performance ratios, so the net profit ratio is still in the negative territory, but better than the last year. Interest coverage ratio, again, there's a reduction because of the conversion of the working capital to the long-term borrowing. Cash ratio is flattish. Efficiencies ratio, current ratio above 1. So this is still, and it is improving. So it shows that business operationally is strengthened. Receivable turnover flattish, inventory turnover again flattish, and operating expenses ratio higher because of the one-off event which we suffered in the Q2. The strategic side, the debt equity ratio, debt increased because of conversion at a group level. So we consolidated all the working capital, and we streamlined all the cash borrowings from the different bank to a one bank. Return on equity again in negative territory at a group level, but yes, it is improved from the heavy losses to lesser. Asset turnover flattish, and the return on asset is, again, there is some reduction. So this is the summary. We are open to any question at any level. We can go to anything. We are happy to answer any questions from operation side, from financial side, anything.
Thank you. Thank you Mr. Badr. يعطيكم العافية. إذا عندكم أي استفسار أو أي سؤال طبعا جاهزين للإجابة على أسئلتكم. If you have any question, please feel free to ask your questions.
Yes, Assalamu alaikum. I have one question. Actually, not one question, two questions. One question related to the consolidated accounts. Your losses are more than last year. So what are you doing on that basis?
Yeah? عنده أي سؤال أي استفسار تفضلوا.
Hello, can you hear me? Assalamu alaikum. Hello.
يا جماعة يعطيكم العافية. لو ما عندكم أسئلة احنا دائما متوفرين وموجودين إذا كان عندكم أي استفسارات أو التواصل ممكن تتواصل معنا. يعطيكم العافية. شكرا جزيلا لكم. شكرا مستر فيفل مستر بالزندر. Thank you very much. وشكرا لكم، وإن شاء الله بيكون موجود رابط اللقاء هذا في اليوتيوب خلال الفترة القادمة إن شاء الله. شكرا جزيلا لكم.
Thank you everyone.